Welcome back to the Deep Dive. Today, we're not just looking at a company. We are tracking the aggressive, very calculated moves of a digital finance giant.
It's more than that.
Yeah, one that's trying to redefine what a global exchange even is. We're strapping in to track Coinbase and their extraordinary strategic offensive in 2025.
This is more than just business as usual. This is a massive game of digital chess, and it's being played on a global scale.
Right.
Coinbase is trying to lock down its position, not just as an exchange, but as the essential backbone of the whole digital economy. And they are willing to spend billions to do it.
So our mission today is to unpack that strategy for you. We've got the data on their relentless acquisition spree, their pivot toward decentralized finance, and this is critical. The expensive regulatory battle they're waging right here in the U.S.
Against the old guard.
Exactly, against traditional finance. It's like building an empire while fighting a war on two fronts.
And if we really want to understand the why behind all this, we have to start with their most recent move, the big one. The acquisition of a platform called Vector.
Vector.
That one purchase tells you almost everything about their shifting priorities.
Okay, let's unpack that. Vector. Sounds pretty technical. What is it, and why did Coinbase feel the need to spend, well, what must have been millions, maybe even billions, to buy it?
So Vector is a decentralized exchange, a DEX, and it's built on the Solana ecosystem, which is important. But before we get into that, we really have to clarify the difference between Coinbase itself and what it just bought.
And Coinbase is the classic example of first category, right? Centralized.
Exactly. Coinbase is a centralized exchange, or CeFi. Think of them like a big national bank or a major supermarket chain. They're the trusted third party. They hold the assets for you.
They hold the keys. They take on the security risk.
That's it. Which is why they're so heavily regulated. Now, a DEX, like Vector, is the complete opposite. It's decentralized. Users have their own wallets, they self-custody, and they trade peer-to-peer.
So there's no middleman holding the money.
No middleman. The user holds all the power and all the responsibility.
So to use your analogy, the world's biggest crypto supermarket just went out and bought a super high-tech farmer's market.
A farmer's market built on one of the fastest networks out there, yeah.
Why do that?
Yeah.
Is this a defensive move? Or is it offensive?
I'd say it's both, which is what makes it so smart. In a recent blog post, Coinbase said their goal is to become get this, the exchange for everything.
The exchange for everything. Wow.
Which means they recognize two things. One, DeFi isn't going away. And two, their main user base finds the whole DeFi experience, connecting wallets, gas fees. It's just too complicated.
So they're betting that users want the freedom of DeFi, but they want it packaged in the simple interface they already know.
That's the vision. They want to integrate all that complex, decentralized stuff seamlessly into their existing app. Make global digital asset trading feel easy, even if what's happening under the hood is a complex DX trade on Vector. It's about getting rid of the friction.
I love that ambition, exchange for everything, but doesn't that stretch them a little thin? I mean, if you try to be a bank, a broker, and a decentralized portal, are they risking regulatory overreach?
That's a huge question. But if you look at their other acquisitions from this year, it's pretty clear they see the risk of standing still as being way bigger. Vector wasn't a one-off purchase. If we zoom out, Coinbase has been on a truly aggressive M&A shopping spree.
A whole campaign.
A huge campaign, spending massive amounts of capital to build a complete ecosystem, a strategic moat around their entire business.
Okay, so give us the rundown. What other pieces did they pick up? What's the strategy behind putting them all together?
They're systematically buying everything they need to build an end-to-end system. This isn't just about trading. It's about controlling every single step of the user experience.
Okay, so where does that start? Information and access?
That's where Spindle comes in. Spindle is a blockchain-based ad platform. Buying it suggests they want to control how information and products are distributed inside their ecosystem.
Cut out the middleman, the ad networks.
Right. And then, crucially, they also bought Roam, which is an online browser.
A dedicated, secure front door to the crypto web.
You got it. So you pair Roam, the browser, with Spindle, the ad network, and you integrate both with their crypto wallets. Suddenly, you've built your own proprietary gateway to the internet. The user's journey starts and ends inside their world.
That feels like a very defensive play to control traffic.
Yeah.
What about the tools for the more sophisticated financial players?
That's where the real money went. They bought Liquify, which is an asset management tool. But the huge one, the one that really gets institutional money excited, was Deribit.
Deribit is massive. That's the biggest crypto options and futures platform out there, right?
It is. Options are critical for professional investors to hedge their risk. By buying Deribit, Coinbase instantly gets a world-class platform that attracts the big money, the institutions who need those sophisticated tools. It's a direct challenge to places like the CME.
So it immediately upgrades their whole institutional offering.
Absolutely. From basic spot trading to complex financial engineering, just like that.
And what else was on the list?
They also added Echo, a crowdfunding platform. So if you trace the whole journey now, you browse securely with Roam, you see targeted info with Spindle, manage your assets with Liquify, raise capital with Echo, do basic trades on Coinbase, and then do advanced hedging on Deribit.
It's a complete closed-loop financial system.
That's the goal.
But this has to be draining capital like crazy. How does this multi-billion-dollar expansion stack up against the legal costs of that regulatory battle they're also fighting? Are they stretching themselves too thin?
And that's the central tension of their whole 2025 strategy. They're spending billions on the future while also spending millions to secure their legal standing in the present. And that choice of the Solana network for the Vector deal, it actually tells us a lot about where their focus is.
The Solana signal. Tell us more. Why go all in on a Solana native platform?
Well, look at their goal again. Exchange for everything. That means you need massive volume and super low cost. The choice to buy a DX built specifically on Solana, it shows a deep, long-term belief in the technical advantages of that ecosystem.
What are those advantages, specifically? I mean, over something like Ethereum.
It really comes down to speed and cost. Solana is just built for high throughput. It can process thousands of transactions a second for a fraction of a penny. If Coinbase wants to handle 1 million small DeFi trades a day without friction, they need a high-speed, low-cost rail system.
And Solana provides that.
It provides that. So this isn't just some philosophical endorsement. It's a cold, hard technical requirement for their vision to even work.
And we're seeing this reflected elsewhere in the market, too.
Exactly. This big corporate move aligns perfectly with the timing of all that capital we've seen flowing into Solana ETFs. The institutional money and the corporate strategy are pointing in the same direction.
Okay, so Coinbase is building this massive ecosystem for the future. But the foundation of their current business, their centralized core, is still under threat in Washington. Let's pivot to that fight.
This is the really high-stakes part. The biggest legal hurdle, the one that's costing them a fortune, is their application for the National Trust Company Charter. It's waiting for a decision from the OCC.
And if they get this charter, what does it let them do that they can't do now? And why are the traditional banks fighting it so hard?
So the charter would basically grant them the same authority as a national bank, but specifically for asset custody safekeeping assets. But more importantly, it would make them a qualified custodian.
And that phrase, qualified custodian, that's the real key, isn't it?
That's the key that unlocks institutional finance. Pension funds, huge asset managers. They are legally required to keep their clients' assets with a qualified custodian. This charter would let Coinbase compete directly with the giants like BNY Mellon or State Street.
Okay, that context is everything. That explains why the banks are fighting this tooth and nail. It's not about crypto. It's about a new competitor trying to eat their lunch in their most profitable business line.
100%. The opposition's argument is that the untested elements of digital asset custody are just too risky. They're saying, these are digital assets. There are risks of smart contract hacks, code exploits, risks that a traditional bank that deals in paper and gold just isn't equipped to handle.
Because holding code on a network is just fundamentally different than locking cash in a vault.
It's a totally different ballgame for risk management, this whole regulatory fight. It's the ultimate collision between the old financial system and this new technology. It really dictates who controls the future.
So while all this is happening, the acquisitions, the regulatory fight, the competition is not just sitting around. After Coinbase went public in 2021, we're now seeing a huge wave of competitors following them to Wall Street.
That's the third major dynamic of 2025. Coinbase proved it could be done. You could go from a crypto startup to a publicly listed SEC-supervised corporation, and now everyone else is following that playbook.
Who are the big names we're seeing in this IPO wave?
Well, we saw a few key moves. On the exchange side, both Kraken and the asset manager Grayscale Investments announced they were filing plans for U.S. listings.
And those are interesting because they're coming from different angles. Grayscale manages funds, Kraken is a direct competitor.
Exactly. And then you also had Gemini, the Winklevoss twins exchange. They listed on NASDAQ back in September. And Bullish listed on the New York Stock Exchange in August.
So that's 4 major competitors hitting Wall Street in a pretty short amount of time. What does that mean for you, the listener?
It signals the irreversible institutionalization of the U.S. crypto market. The days of small, opaque startups are over. Public listings mean transparency, SEC oversight, and deep pools of capital. And for the user, all this competition is a huge net positive.
This, it drives down fees.
It drives down fees, it pushes for better service, more innovation. You could argue it's the pressure from this rising tide of competition that's forcing Coinbase to make all these aggressive acquisitions in the first place, innovate or get outflanked.
This has been incredibly insightful. We've covered the M&A blitz, the move into DeFi and Solana, the huge regulatory battle, and this wave of new competition. For the person listening to this, what does all this action mean for their own strategy? What are the takeaways?
I think there are 3 really clear, actionable insights you can take directly from what Coinbase is doing this year.
Okay, let's start with where the money's going.
Insight number 1, look where the big money goes. Coinbase's massive investment in a Solana platform like Vector. That's not a guess. It is a clear signal of long-term belief in that ecosystem. So for you, that means you should look beyond just buying SOL, the currency.
Yeah.
Spend your time researching the actual projects being built on Solana, the lending protocols, the NFT marketplaces. The real opportunity is often in the projects that these giants are getting ready to integrate.
Follow the construction workers, not just the price of land. That's great. What's number 2?
Insight number 2 is prepare for the decentralized future. A centralized giant like Coinbase is spending billions to integrate decentralized tools. That tells you the boundaries are blurring for good. For you, this is a call to action. You need to upgrade your skills, meaning learn how to use a personal wallet, master self-custody. If you don't hold your keys, you don't own your assets. And practice trading safely on a DX. Knowing how to use these tools is going to be essential.
Knowledge is the best risk mitigation. Okay, and finally, what's the big picture mindset here?
Insight number 3, adopt a long-term, cold-headed view. Just remember, all these companies we're talking about, Coinbase, Kraken, they're building decade-long, multi-billion-dollar infrastructure. They are not worried about short-term price swings.
They're focused on fundamentals.
They're focused on fundamentals, on market share, on technology. And as an investor, you should try to do the same. Focus on the real value being created by these ecosystems, and don't let the daily noise shake you from a long-term strategy.
That is powerful, actionable advice. Thank you so much for guiding us through this, a truly fascinating deep dive into Coinbase's empire-building year.
My pleasure.
As we close out, I want to leave you with one final provocative thought. We talk about that regulatory struggle. The traditional banks are fighting so hard to stop Coinbase from getting that qualified custodian license. So what if they succeed? If the old guard manages to block them, does that failure to centralize ultimately force the entire industry, the developers and the users, to accelerate their move away from regulated players and deeper into the pure autonomy of self-custody and real DeFi? Something for you to think about. We'll see you next time.